Hello, and thank you again for checking out another video. My name is Dan Sharlock, and I am producing this video today so that you can help understand how to best purchase life insurance. This is a video that I wish every single consumer could watch before they make life insurance purchases. So, the first and most important assessment that you can make, in our opinion, on how to purchase life insurance is not necessarily the type of insurance. So, most people in my field want to say, hey, you need term insurance, you need permanent insurance, you need universal life, you need adjustable life, you need whole life. That is not, in our opinion, the most important decision. The most important thing, the thing that you cannot change, contrary to popular belief, after you make the decision, is your death benefit. Okay? There's a lot of media hype today that would be all over the place saying or speaking about insurance, specifically health insurance. And even more specifically, consumers are tending to think nowadays that you can buy insurance after you need it. Okay. Now, I have no clue how this logic perpetrated my industry or this industry. However, there are several, in fact, most aspects or most companies in the financial services realm that would never give you an insurance contract after you need the insurance. It obviously makes no sense at all. So, that being said, after you're dead, you have no chance of getting a death benefit. After you develop a chronic illness, you have no chance of getting a death benefit. If you have a serious health issue, you have a very hard chance or a much harder chance of obtaining a death benefit. The only fair time that you can make a true decision about your death benefit purchase is when you are healthy and when you first assess the decision, assuming that you are healthy. So we like to tell people and have people educate themselves about the death benefit that they would select before they make the product oriented decision. I cannot tell you how many times I have asked a consumer who has came in here owning, most consumers do own insurance, owning insurance. They come in and they have, let's say, $350,000 of insurance. And I say, well, where'd you come up with that amount? With the unique amount? And they say, well, I don't know. It was just what we ended up with. It's an interesting answer. However, it doesn't make a lot of sense to me. Now, it's fine, right? If that is the actual amount that you'd want. But usually, when you purchase a car or a house, you spend a little bit of time trying to figure out what you want, correct? We certainly do, right? So I have built several homes and I have never gone into a home building process just hacking around with lumber and nails and starting the process not knowing at all what I was going to get at the end, or not first analyzing what I needed and wanted. What we find a lot of consumers doing today is just taking the random advice, or I wouldn't even say it's advice, the random pre-selected death benefit amounts somehow fed to them by something they heard or something they guessed at, rather than articulating for themselves what expenses and items that they would want to cover. And in fact, a lot of times we find that that isn't even necessary. We like to encourage people to answer this simple question. And the question is this: if you didn't have to worry about the premium, in other words, if the premium was not an issue, how much coverage would you want? And the obvious answer to that is, it varies, but Most people would say, well, as much as I could get, right? And that would be our answer. Now, can we do that? Not always. But what we strategize for is trying to rework less efficient premium dollars and obtain a significantly higher death benefit by simply rethinking about our decision making and reassessing what those premium dollars are going towards. Typically, as we work with someone and look at their financial insurance world or life and the decisions that they're making, we can usually find premium dollars in order to pay for the appropriate amount of coverage that the consumers actually or our clients actually want, rather than some lesser amount that somebody else might have sold them or they might have purchased. So this so far has not been really a calculated transaction. From our perspective, we know how the insurance companies work with consumers just due to the fact that we've been doing this for nearly 20 years. The insurance industry gives us a range, depending on your age, of, I would say, 10 to 25 times, maybe 30 times, pushing the envelope, your annual income that they will grant us in death benefit. That is typically what we would strive for helping someone accomplish purchasing. Very few people would probably choose to purchase that amount when it came down to it, but when you present the decision differently and think differently and utilize your resources as efficiently as possible, a lot of times that can become a reality. So what we typically would see is very simply a way that we could typically sit down with someone, rework their financial life, rework their premiums, rework their thought process behind their term insurance or permanent insurance strategizing, and figure out ways to devise a better plan so that long term you're able to meet your objectives and do so in a cost effective manner. We are definitely going to develop more videos on this topic and get into more details or more things that you could look at in order to assess whether or not you currently have the right coverage. But in general, this is just one of many to help us understand insurance. Thanks for checking it out. Talk to you soon.